Let's Talk Money.
Welcome back. Here with us on Let's Talk Money, and this week we're talking about what the mutual fund has in store for us in our journey towards self-reliance, atmanirbharta, and financial independence. And we have, of course, industry veterans with us in the studios, as well as Nilesh joining us virtually. So, gentlemen, now I want to talk about the future, because the future does look very, very interesting. You know, almost every couple of months, we have new regulations coming in, some of them to tighten up the screws on the industry. But these days, there is a lot of talk about offering more flexibility as well. So I want to take that up with the panel. And Saurabh, let me start with you. The latest consultation paper that I read through had a lot of, different aspects that they were talking about, allowing funds to perhaps invest in other areas like REITs, equity funds to invest in, things like REITs and gold, etc. There is, also talk about looking at value and contra funds. How do you limit overlaps and yet let the products be out there in the market? So let's just start right there. When it comes to investing in things beyond equity, is the time right? Is this something that the industry would want?
So great questions would be, let's first start at the core of what you mentioned, different asset classes. And here, I think we need to understand that mutual funds is not synonymous with equity investing only. We need to understand that it's a vehicle which basically is giving you the option to invest into every underlying asset class. So it's equities, it's debt, it's gold, silver, international equities, REITs, InvITs. So it's actually a medium in which you can get exposure to whichever underlying asset class you basically can get into.
On that, actually, I should request our director and producer to throw up the stat. So let's understand how the industry also stacks up right now, because these are the latest numbers. The total industry AUM of close to 75 lakh crores. The largest still is equity. Over 33 lakhs is equity. The next big category, of course, is fixed income debt. That's about 18 to 19 lakh crores. And then there is the hybrid category, which is now growing and gaining popularity and prominence as well, over 10 lakh crores in hybrids. And then a bunch of other things, and there is passive investing, and we'll come to that as well. But that's the current breakup. But you're right, absolutely. Mutual funds, can be investing across a diverse range of assets. So as investors, what further innovation should we expect from the industry?
No, I think we are getting into the asset allocation era. The more the education, more people will realize that it's important to allocate correctly in different asset classes over a period of time, over a longer period of time. And that will reduce the risk of your portfolio, but it will give you better risk-adjusted returns. I think, increasingly going forward, you will see more focus on multi-asset allocation, retirement plans, as there's a percentage of population which starts getting old, and I'm living longer. So I need money for a longer period of time after retiring, which is the best instrument, and how do I go about that? All these concepts will start coming into play very, very soon at this point of time.
Navneet, on retirement, great that you brought this up, because again, as part of the same consultation paper, SEBI is now talking about some more flexibility when it comes to retirement products and also products for children's planning, these children's fund. And as of now, these are called solution-oriented schemes, by the way. It's a very small paltry sum compared to the overall total. So what will it take for these products to really take off? And how do you make it less confusing? Because for an investor, I want to save for my retirement. Now, flexi cap fund, regular diversified large cap fund, or a retirement product. I mean, how does it become easier for the investor to decide?
No, I think it's quite a simple product. Over the last 30 years, I mean, you just talked about there are lots of changes coming. But I think what the thing that we take pride in is the continuity that has been maintained. There are so many products that all of us have been running, which have been around for 20, 25, 30 years, and they've done tremendous amount of wealth creation. At the same time, as markets evolve, as India grows from 4 trillion to 10 trillion, 10 to 20 trillion, there would be different kinds of aspirations of investors, expectations of investors, newer asset classes are emerging, and SEBI has always been forthcoming, proactive in terms of ensuring that mutual funds can take access to those markets markets can provide a better solution to the investors in terms of accessing those asset classes, and which is what Saurabh talked about, where be it the investing in the gold and silver or money market or solution oriented products or equity products or hybrid products. I think it's a we consider ourselves a solution provider for any kind of life goals that you have. You have a solution from the mutual fund, right from parking a short term cash surplus to income generation to a long term wealth creation.
But that's what I'm saying. It's still confusing, right, for an investor, because retirement objectives can be achieved through a diversified fund as well.
You need a good, you don't need, but on a sarcastic note, you need a good advisor.
Financial advisor to perhaps handhold. Fair point. But now let me take up something a little contentious. And, we at CNBC-TV18, particularly me, looking at Let's Talk Money, the focus is only the end investor, the retail investor. And there I want to ask a question to our entire panel. Let me start with Nilesh on this. Nilesh, NFOs and thematic and sectoral funds. I know you already know the question that's coming, right? Because this is where the bulk of the money has been coming in, even in the last numbers. So through the last couple of months, actually, lots and lots of new fund offerings coming in, many of them on the sectoral and thematic side. And this is where SEBI is now also talking about ensuring that there are not too many overlaps. Now, how will the industry perhaps look at balancing its own, need to create more products and get more flows with the need of investor experience not getting soured? Because many of the NFOs do end up coming in pockets where there's a lot of exuberance in the market. So from an industry perspective, how do you look at this trend? And what is your message? What will be your message to investors as the distribution machinery continues to push the NFOs forward?
So to investor, my message is simple. You don't have to buy NFO if it doesn't meet your objective. Just because there is NFO doesn't mean that you have to invest into it. Now, assume mutual fund as a restaurant. We first started with basic dal roti chawal sabzi. That's where our diversified funds came into play. And there are 9 categories of diversified fund, from large cap to multi cap. Now, beyond that, there is need for sectoral and thematic funds. There is need for newer quant-oriented funds. There is need for hybrid funds. But investor must choose only those products which are required by them. We as distributor will try to expand our range because we want to reach out from 5 crore investors to 25 crore investors. And to reach out to that number of investors, we'll have to create a range of product. And there are many people who say, oh, but NFOs open at a discount. So please show me any NFO which is still at a discount after 5 years of investment. When we launch product, we recommend people to follow asset allocation. We recommend people to do investment via systematic investment plan. So people have to exercise caution while investing in NFO. And we do mention investors to come with long-term horizon. If you are doing SIP, you are doing asset allocation, you are investing long-term investment, you will make money.
Okay, all right. So basically the onus is on us investors, and I'm not shying away from that at all. Ultimately, we need to ask the right questions and make sure our investment objectives are met. We're unfortunately out of time. So I want to take 10 last seconds from each of the panelists, because this is Let's Talk Money. You have to give us your personal money mantra, your personal money / investing / personal finance tip that you follow or you tell your friends and family to follow. Sandeep?
So I think from my point of view is keep it simple. Don't invest in something that you don't understand. Don't invest in something with the layers where you can't see where you're investing.
Okay.
And to your earlier question, I would personally stay away from thematic funds.
Oh, there you go. He's saying he's not looking at thematic. So it's what works for you. Know your risk appetite and know your objectives. Got that. Keep it simple. That's his message. Saurabh?
You need a good night's sleep. If your investments basically are going to keep you awake, if you have to keep watching the mobile phone for your NAVs or the price movements, you have invested in the wrong products.
Okay, so invest for a good night's sleep. That's a very interesting line. Navneet?
2 things. One is there is only one formula of wealth creation, that is sound investment plus time plus patience. Nothing else.
Sound investment plus time plus patience.
I think if you don't have these 3, then you won't create wealth in the long run. It will be very, very difficult. And second is the people on this panel are the ones who take tremendous joy in making money for other people. than only thinking about ourselves.
Okay, absolutely. Nilesh, final word and your investment mantra and tip as well.
Mutual fund sahi hai.
We've heard that before. Ek naya wala bhi.
So I will just say about mutual fund industry rather than money mantra. हजारों ख्वाहिशें ऐसी कि हर ख्वाहिश पे दम निकले. बहुत निकले मेरे अरमान, फिर भी कम निकले. We have done a lot in last 30 years, but we have a long distance to cover to ensure that every Indian is financially secured.
Wow, very well said, and what a poetic note to end on. Thank you very much. Great conversation, gentlemen, and quite an enlightening discussion as well. We hope that all of you and your peers keep powering forward so people like me, people who are watching the show, can go ahead and realize all our financial as well as life goals and dreams. Thank you so much.
Thank you.
Thank you, Sabir.
Well, with that, it's a wrap on this edition of Let's Talk Money. Thank you so much for joining in. Keep sending us your comments, feedback, and queries. See you again next week.
Let's Talk Money